IMBI is following our implied projections almost to the T. What's going to happen with price action now that we got that rejection at 60 cents? Well, let's go ahead and find out in this video. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an IMBI, technicals, statistical, and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. With that said, let's go ahead and dive right into the charts. Okay, so we are looking at the same formation in the 8-hour chart that we've been looking at for IMBI for some time now. We did speak about the golden rule of three within formations like this, which consists of test number 1, 2, 3 of the resistance, followed by a capitulation event or accumulation of sorts, and in a true attempt of breaking out on test number 4, which is something that we got. We also got a test back to our newly converted resistance into support, followed by a continuation to the upside as per expected. We did have a resistance range right over here that we were looking at, and we have since cleared it, and now we are potentially coming back to use it as a form of support, or since we're so close to a gap right over here, we may actually just close that gap before a continuation onto the upside. We can actually verify those movements within the following charts. Let's see. Let's go ahead and just pull up some moving averages just to see what we have in the works here. So we are, we are pretty far above the 7-day exponential moving average and a 30-day exponential moving average. This 7-day has direct confluence with our gap closure right over here, so this can be used as a form of support before a continuation up. Let's close this real quick. I don't usually use this very much, but I can go ahead and pull it up. It looks like volume weighted average price, VWAP, or VWAP. We actually stopped right at the support of it. So usually some people tend to use VWAP as a form of continuation for the upside or downside. We are facing a support from VWAP right now, so we can continue up to the upside. However, I do believe that a psychological component may be a little stronger than an indicator at this point, and that psychological component, is this gap right over here. Now, gaps don't always have to be filled. They don't actually always have to. It's just sometimes when we're that close to that gap, we might as well close it. Now, another little gap that you can actually still see within the price action is actually between this candle and this candle right over here. So the opening of this and the closure of this right over here. So let's make a drawing of a box for that range, and let's put it just like this right here. And you can see that it also does have some confluence with the gap that we're facing right over here. So there is that potential that we can actually face some downside. Now let's go ahead and move on to the next chart. So this is the chart that we used in order to gain the possibility of using the 60-cent level of the 1.618 golden ratio, which actually worked just as expected, which is why we had a green line over here and saying that this is potentially, one of the first stops along our upside trajectory. Now that implied, the price objective for this falling wedge, which is obtained by taking a trend line from the hypotenuse of the triangle to the lower end of the triangle and applying it to that point of breakout, we get a target of about 72.97, so that's 72 cents, almost 73 cents. And that target is the formation's objective. I definitely could see us continuing up to the upside, but we do definitely have some pretty bearish price action right now, and this is temporarily a pullback. It's not a reversal by any means. I can actually still see the price action moving towards the upside even still. In making our retracement to the EMA 7, which could be at around 53-54 cents, we can actually use this as a bounce before a continuation onto the upside, and then using our 100-day simple moving average as another form of resistance that we can use in order for us to come back to the 60-cent level, finding support, and then continuing on to the upside We'll see what's going to happen with a 2.618 golden mean, but there is the possibility to where we can actually make the formation top and then use the 2.618 as a form of support. This is not by any means guaranteed. First of all, nothing in the markets is guaranteed, right? Actually, one of the most important things here is that I am not a financial advisor. Please take whatever I do show and iterate within these videos as a form of entertainment. I need you guys to do your own DD, and we'll be okay. All right. So we do have a substantial amount of moving averages below us serving as support. So this support range consisting of the EMA 7, the 50-day simple moving average, the 30-day exponential moving average, and the 10-day simple moving average all are serving as a per se a guide to the way up. And it looks like we may want to just come back and catch them so then we can continue up to the upside based on raw price action. Okay, that's just technicals that I'm talking about. Since I've seen, this formation, realize it like in this manner so many times, then we could potentially see something like that. Let's move on to the next chart now. This is the statistical side of the analysis, in which we were able to calculate from a backtest that includes our volatility represented by this indicator BBWP versus momentum. And in that backtest, it's actually a backtest that I actually performed by hand from the beginning of the trading of the IMBI asset. I'm talking about from its genesis, from let's see, which is about July 2019, right back there. We actually took note of every iteration to where volatility started to create a contraction phase from what I consider to be beyond the extreme percentile, which is 90% and above, from this green line and above. So every single time, let's see. I'm sorry, this is the contraction side. So I actually took the test from the opposing side. Volatility is direction neutral. So we pair it with this indicator to get a bias in that direction. So my apologies, not from this here. I actually used a backtest from a contractive level starting an expansion phase. And that is anytime that we have dropped to critical volatility levels of below the 15th percentile. And created that upside thrust. I've taken note of the duration of the iteration, the upside thrust on the iteration versus the amount of times that volatility versus momentum have guessed the upside correctly versus incorrectly, as you can see on the green and red lines right over here. Now, the statistical metric that came back for IMBI are out of 29 total iterations, we guessed correctly to the upside 15. That gives us an average upside accuracy of 51.72% with an average upside thrust of 32.18% over the span of just over 11 days. This is proof of work. Now, the criteria to be met to make that upside move was based on having both the volatility component and the moving average both pitched to the upside beyond the critical zone, which is 15%, alongside the stochastic momentum also poised to the upside, pitched to the upside. And in that move, we've already started this ascent. Now, I have this green line here to show, this yellow line here to show you that there is still potential for upside, since this is essentially the highest iteration that IMBI has ever touched, which is right around July 2020. So we do still have some space, even though we are suggesting a potential pullback. The potential pullback is very much in accordance to what I'm talking about in covering this gap right down here. So let's go ahead and continue with that analysis right over here. That move of 32.18% is absolutely valid, but it is a statistical metric and not a certainty. So that statistical metric leads us to a top target of about 68.41, in which we've already touched 60 cents out of. So there is a potential to where the move may already be completed, but we do have to watch out when the stochastic momentum starts actually pitched to the downside, because then price action will continue to the downside. Right now, we're getting a suggestion of a downside based on a pullback. Since we are in an 8-hour time frame, it's not such a large time frame. Okay, so there is that potential to where we can come right back down to the 53.91, 54 cent level based on our larger time frame fib, which is also in confluence with the other targets that we were talking about for 54 cents. The 1.618 here is located at 54 cents, and also the closure of that gap is right in confluence with that. There is very much, I'm saying that there is a strong likelihood that we're going to come back here. So, okay, you guys. So let's go ahead and move on to the last chart of this. This is going to be the RSI. And I have since added one more bullish divergence into these lines right over here, apart from the other 1, 2, 3, 4, 5 that I had. So now we have a total of 6, 3, 4, 5. 1, 2, 3, 4, 5. Sorry, 4 that we had prior. Now we have 5. So the one that I just added was actually to here. From this point right over here, you can actually see that this line is actually this one right over here. So it's actually making a higher high in the RSI profile while price action is making a lower low. And this also confirms another drive of bullish divergence. However, this drive is a little different since the price action is actually, since the trend line is going through all this price action, that makes it a phantom drive of bullish divergence. It's still there, so we are in play for that right now. Here's the gap that we're talking about: 54 cent to the bottom, 58.36 to the top, and we can. I mean, there is also the potential to where we don't face that downside and just continue from up here using this as a form of support. But I mean, this is ridiculously close enough. We may as well just touch that target and continue on up. Okay, so the 12-hour RSI is suggesting a continuation to the upside with a significant pivot. So let's go ahead and look at some closer time frames. And I've also made a diagram right here so that you can be able to see my RSI properties so that I don't have to explain this over and over again in every video. Let's pull up a multi-pane. Okay. We're going to start with the 30-minute immediate short-term time frame here on the first pane. All right, so yeah, this is what I'm talking about. So the 30-minute immediate short-term time frame is suggesting a continuation onto the upside, to the downside, sorry. But as you can see, we can actually still use the moving average represented by this pink line right over here. We can potentially use it as a form of support before a continuation onto the upside, just like we have here, where we penetrate it for a short amount of time and then we continue on to the upside. This is very much in accordance of what we're speaking of regarding the short-term pullback. 15-minute micro time frame is also suggesting the exact same thing. Let's go ahead and move on to the bi-hourly. So bi-hourly, now the pitch is starting to kind of not be so much to the downside. We are well within the area of the bull strength percentile and trading above the moving average, which is absolutely bullish. This, in my opinion, has more of a likelihood to the upside since we are positioned right up here rather than down here. Okay, so now let's look at the 6-hour RSI. The 6-hour RSI, as you can see now, above the 2-hour, we're looking at a continuation up to the upside. And we're reaching the deep areas of the bull weakness percentile, which means we're likely to be gravitated right into bull strength. So this is also a very good sign. As you can see, we are almost making kind of an impulsive move to the upside, given the distance between price action, which is here, and the moving average. This is a 14-day period moving average. Okay, now the daily RSI, since we already looked at the 12-hour, is absolutely suggesting a continuation onto the upside. It is approaching the bull weakness percentile, which means we're going to be gravitated into bull strength and so on. The bi-daily should be around the same thing. Yeah, so we have actually now broken the bear strength percentile and now have moved into the bear weakness percentile. We do have to kind of watch out in these situations because when we're in these shallow areas or the deep areas, we're likely to be gravitated into the other section. So yeah, with that said, I definitely think that we're likely to come back down and test this gap support, which we can see actually a lot more clear in the single pane of the 12-hour RSI profile, which is right over here. Yeah, I definitely think we're going to come back right down here and then continue on to the upside. So careful with your longs. Know that these are just statistical metrics and just my eyes, right? Please do your own DD and we'll be okay. But with that said, I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, don't hesitate to reach out to me on Discord, on Twitter. I'll make sure to leave the links in the description below for you to consider joining that the Discord trading community called ARCa. All right, so I wish you well. I wish you a good night and the rest of your weekend, and I will catch you at the bell on Monday. Adios.